Welcome to Stock Market Investing with the ARMR Report. Thanks for joining me on a Saturday. I appreciate you spending some time with me. Excuse me, son. Thanks. We're going to go. All right. Let's try that again. Welcome to the ARMR Report. I'm your host, Brett Rosenthal. This is a show about stock market investing, as you all guys already know. Here's what we're going to talk about today. We're going to dive into market action last week, what the algorithms are telling us for what's going to happen next week. If you remember 2 weeks ago, when I sat at this desk talking to you, I said we're risk on everywhere and we're getting aggressive. In the last 2 weeks, we've seen alpha show up in the portfolio, and the question is, what's going to happen next? And so I titled this show today, are we about to see the market skyrocket, right? I asked you that 2 weeks ago. So let's kind of go over what's happening. I want to delve into a couple of issues that are very important to me from an educational standpoint. So we're going to go over real quick how to use Gamma to trade. We absolutely killed it this week, day trading. I'm going to show you a couple of examples of how easy it can be if you have the right Gamma information and a trigger system, right? So we have the ARMR algorithms that we use to day trade. We match it with Gamma locations, and we can have some pretty big success on our live trading desk, right? So we have the ARMR Pro live trading desk, and I share my screen during the mornings to day trade. I'm going to share a couple of trades with you. I also want to talk about stop losses. This is incredibly important. I had a conversation with a longtime ARMR subscriber, and it was a little disheartening to me because this individual made a lot of money with us on the run up, and for some reason has remained committed to the innovator type of stocks this year. So of course it's been a big round trip. And so I feel like I'm not doing everybody. I'm not being clear enough. I'm not doing you the service I'm trying to do for you. Right? Everybody else on YouTube is a carnival barker, tells you how much money you're going to make if you buy Dogecoin or whatever. Okay. The ARMR report stands for Algorithmic Risk Management Research. Risk management. Right? So the object here, the ARMR investing way, it's a three-stage process. We build our whiteboard. That's our fundamental research. We use our algorithms to decide when we're going to commit capital like we did 2 weeks ago and when we have to protect it. And we wrap it all up with a stop loss discipline. If you don't have that discipline, long-term investing can be a zero-sum game. You have wicked moves up, you give it all away when the thing implodes, you're back to square one, you don't know how to get started, you get frustrated, you quit. Or you just go out and buy S&P funds and forget it and look for long-term returns of whatever, 7%. Okay, so I'm going to go over with you the simple step-by-step process to follow to protect your capital while making money, while capturing upside. All right, so let's dive in. Before I get started, don't forget, these are my own personal opinions. I run my own capital. I'm sharing with you 30 years of experience doing this. You have to use your own risk tolerance, your own goals to create your own process, right? So this is a guide. Take it and make it your own. That's what the ARMR report's about. So the first thing I wanted to do today, and I'm going to just throw this up here. I'm going to say, here it goes, right? ARMR education. Step one. All right. Let's talk about how to trade using Gamma. I'm going to try to keep this quick. We're going to get to Q&A at the end. Don't forget, guys, if you enjoyed this conversation, you can subscribe right down here to the YouTube channel and, of course, the ARMR report if you wish. Don't forget to hit the like button to help me out here on YouTube. All right. So I want to share with you just how this chart works. First of all, there's the S&P. I want to get to that in a minute, but I want to go to Zoom. So we're going to hit first a topic on how to day trade using Gamma information. So let me start by saying this. I come in every day to the ARMR Pro day trading desk. Right? It's not day trading, it's a live trading desk. So I share my screen and I'm chatting for the first few hours of trading, just like this, with ARMR subscribers, ARMR insiders, okay? And to start the morning, based on what the algorithms are showing us, I share what my stance is. So some mornings I come in looking to buy weakness. I would say most mornings I do that. So the market opens and I wait for the what I call crazy Ivans, just the market decides to turn around and implode for half an hour for no reason, and then I start trading. But there are some days where I look for it to be a gap and go day. Market gaps up and it's going to go. And that's what I said yesterday morning. I said, guys, this is going to be a gap and go day, in my opinion. And so that means I'll be trading in the first 15 minutes of the day. So let's get our ducks in a row so we know what stocks we're looking at. And when we see them using gamma information and the ARMR Algo trigger, we'll put money to work. And we ended up having a monster day yesterday. I'm going to show you 2 examples of how we do it. Zoom is a trade we had yesterday. So first of all, what I like to do is look for the daily chart that's compelling to me so that large flows of institutional capital can be putting money to work on a longer term basis, which is going to back up my day trade. All right. So this to me, we already know that Zoom had a huge earnings announcement, raised guidance. Everything looks great. Stock should be up a lot. And it didn't go up. It didn't go down. It kind of, went sideways a bit. But I expect the stock to go up on that earnings number. And I think institutions are going to put money to work. So it goes to the top of my list to day trade. All right. And I may even end up adding it to ARMR Portfolios. But then what we do is we drill down into the day trading chart. So each bar is 3 minutes. Okay. So the black dots are the ARMR. This is the ARMR algorithm, all these lines. All the lines are part of the ARMR algorithm we call the price movement profiler, the PMP. Okay. So it's all these lines are really based off of our core belief of mean reversion trading based on the volume weighted average price, or the VWAP. I'm going to say ARMR VWAP, ARMR algorithm. It's because we take basic off-the-shelf tools like volume-weighted average price, and we infuse those tools with a volatility component, and that's how it is a little bit different than something you may see if you just download it off a TradeStation or Thinkorswim or whatever. But the basic ideas apply, okay? So what we knew about Zoom on this particular, there's 2 different ways we use gamma. The key gamma level was 300 on Zoom. The asset opened the day above prior day VWAP. So here's how we trade. This is the prior day. This is the line of demarcation right here. So on the live trading desk, we have this chart up. We say, okay, we're going to watch Zoom this morning, see if we get the right setup. What's the setup? Step 1, the asset has to be trading above the prior day's VWAP. Okay, it did that right at the open, the first bar. Okay. Step 2, the asset has to be trading above the top day VWAP, right? So I don't buy the first bar of the day, but I can buy the second bar of the day, right? After it goes above these black dots here, which is the top day VWAP, the day we're trading. We put the position on at that point. And what we're saying on this trade is, and what I shared with ARMR insiders in the day on the ARMR Pro live trading desk, is I said, guys, we're expecting a run up to 300 where the gamma level is. It's a magnet. It's going to pull it up there. It also happens to be this teal line right here is a major, major importance for us in day trading. It's the average true range high of the day, the ATR high. Now, again, it's an ARMR average true range. So it changes based on volatility, top day and multi-day. So it won't be exactly what you see on TradeStation, but you get the idea. It's incredibly important to use average true ranges, all right? So when the average true range and the gamma level is almost exactly the same, that's an incredible pull. So that's an easy trade to put on. The stop is the low of the bar we buy. I can't impress upon you enough the importance of understanding that trades that work, particularly day trades, never challenge a stop. So don't be afraid to use a tight stop. If you're picking the stock off right, it should run and never challenge the low of the bar you're buying. Okay. So here we go. It never, as you can see, never challenges the low of the bar we're buying and just rips higher. Okay. And of course, right in here, it depends on how you want to trade. Okay. For me, I have a simple process that I try to follow every day. I look for the trigger, which I just showed you based on ARMR algorithm, put the position on. The stop is the low of the bar I bought. I'm going to book half of my gains at the average true range high of the day. And then I'm going to raise my stop to right under the VWAP on the rest of the position. So theoretically, what you want to do is book, and what I would like to do, and sometimes I deviate from this, okay? But statistically speaking, this is what is most successful for me. I want to put the trade, I want to book half the gains right here, and then put a stop in below the VWAP, which is the black dotted line. And you can let that thing run all day. And you could have sold it at the end of the day because it never goes below the VWAP. Now, why do I sell some here? You could say, well, don't sell any. You could have made a lot more money if I held it all day. All right, here's another example off of the ARMR Pro live trading desk on Friday. Okay, here's a perfect example. Here's MGI. We put this trade on. Now, notice how this trade works. It's number one, above prior day VWAP. Number two, it's above top day VWAP. We buy the second bar of the day. Look where it goes. Look where it goes, guys. Ladies and gentlemen, you want to know why I book some of my gains right at the average true range high of the day? Because this trade only went to the ATR. Double topped, broke down, gone. Goes down the rest of the day, never to be seen again. Okay? So, let me just switch over real quick. The Palantir. We did this twice last week. We had 2 trades on PLTR last week that were absolutely stealing candy from a baby. Okay? And they both centered around, I'm going to show you right here. This, in this case, I'm going to put this price in so you can see it. Okay, what is that? Whoops. All right. This should be around 23. Yeah, 23 is right up here. Okay. This was $23 a share. That was the key gamma level on PLTR all week. What we did on this day, which was a different trade, this was not a day we were trying to buy a gap and go. We were waiting for the initial sell-off in the market, which we got in the morning. You can see Palantir sold up, right? When it popped above the VWAP, we put this trade on. It went to and through the $23 price. Couldn't quite get above the ATR high of the day. We booked our profit up here. That was a different type of trade. But now look at what happened the next day. And this is where we really banked out. Okay. So PLTR opens the next day and challenges the prior day's VWAP. You can see that, right? Sets up a bottom on prior day's VWAP. Reverses right here was the place to buy the stock. This was the easiest trade I'll ever find. The risk was the low of this bar right here. So no big deal, not a lot of risk. It's right at the 23 gamma, goes above the ARMR VWAP and never looks back. You would book a portion of the profit right here at the ATR. The rest of the thing rips all day and you could just hold it to the close if you want. Okay. So wrapping up that education segment, from a day trading standpoint, using gamma information as a target, which we did on ZM, right? So you have to use your own trigger systems. And on the ARMR Pro live trading desk, I share the ARMR trigger system, right? So I say, here are the stocks that are triggering. This is the original stop, which is the low of the bar we're buying. We use the run up to the ATR to book half the gains, and then a trailed stop with the VWAP the rest of the day, or however you want to exit. This is just a guide. But knowing the gamma information makes this game a lot more fun and a lot easier, and it's what we share all day, every morning. All day, every morning on the ARMR Pro live trading desk, because that's how we set up our day. And typically by 11:30, 12 o'clock, we're done day trading. Profits have been booked. Now we invest, we swing trade, we're working all day, but from a pure day trading standpoint, we're done. I mean, sometimes I wish that's all I did for a living. I make my money and get up and walk away, go to the beach the rest of the day. I don't know. Maybe one day I'm going to get there. It's hard to teach an old dog new tricks. You know, I don't know. I've just been doing this so long, and I love investing, and I love uncovering great ideas. I was on a conference call of skills on Friday and gathered a lot of interesting information on this idea that I think could be enormous. So I can't ever get away from doing that research. So I guess I'll never just day trade. But boy, it's a fun way of living, you know. Anyway, all right. Now, on to the next topic real quick. Okay. ARMR Education Series number 2. Topic I want to talk about real quick. Okay. Then we're going to get to market action and what I think is going to happen next week. We're going to look at the ARMR Algos. I'll share a couple of charts that we're focused on, and I'll get to your Q&A. But this is very important to me. The ARMR report, to me, I named it the ARMR report. I came up with that name because I believe it's like armor for the portfolio. It helps you put capital to work. It's a guide to help you put capital to work when probabilities are at their greatest and reward is worth the risk. So 2 weeks ago, when I came on this show and I said, ARMR index only portfolio is 100% long. In fact, 132.5% long, okay? Markets are going up from here, statistically speaking. Now, it doesn't always work, right? I mean, you know, we're going back 20 years, we're probably somewhere around 70% accurate, maybe 80. Depends on what index you're trading, okay? The highest probability is with the S&P. And when I say those statistics, you say, that's incredible. Let me explain what that means. That's somewhere around 80%. When we get a risk-on green signal, what it means is 7 or 8 times out of 10, the market will go up enough for our net worth to go up enough for us to raise our stops and get out of that cycle at a small profit, or at the very least break even. So we're not going to cut into principal. This is very important. The only way those statistics work is if we follow a stop loss discipline. It's not like we're 7 or 8 out of 10 and make a fortune every time. We don't know which time the markets are going to skyrocket. We captured it last year and had a massive up year, okay? But we don't know which risk on entry point is going to work. And let me tell you something else. If we start guessing which one's going to work, we're always going to guess wrong. There's always a wall of worry that will talk you out of a trade. This is about investing on the right side of probabilities. There are carnival barkers on YouTube who will shout at you, the sky is falling, the market's crashing, get out of everything, okay? They're just doing that to get subscribers. They're going to be right 1 out of 100 times, and then they'll market the hilt out of that call, and everyone will forget about everything else they've said. That doesn't make anybody money, okay? I'm trying to share with you the ARMR investing way. It's a process to increase net worth over time, and it only works if you follow the 3 stages. And so I had this conversation with an ARMR insider, and I just, am I not, I came away from the conversation thinking to myself, God, am I not expressing this correctly? Okay. This is not a crystal ball. I don't know how much a risk on signal is going to make us, but I can tell you that the strategy doesn't work if you don't wrap it up with a bow called stop losses. So this is how we're going to stop out every position. Step 1. Grab a pen and piece of paper. Write this down. This is how I protect my capital. Algorithmic risk management research. This is how I protect it. You can tweak it. I hope you do. Come up with a strategy that fits your personality. I hope you do. But take away from this conversation the fact that you've got to have a strategy. And a strategy is not buying and just holding something. That's not a strategy. You can tell me, oh, I can go look back at the market over the last 100 years and it always goes up and the rate of return is X%, so I can buy and hold it. You absolutely can, and I suggest you stop watching this video, okay? Go ahead and do that. If you don't mind watching your net worth drop 50% in 6 weeks, If that doesn't bother you because you're going to hold it for the next 10 years and assume that the government will bail you out every time, then you certainly don't need to be watching this. Okay? I'm not willing to do that with my money. I've worked too hard for my money. I don't even see the need for that agita because it's very simple to follow a stop loss discipline and protect your capital and still capture the upside. So grab a pen and piece of paper. This is what we do here. This is the ARMR investing way. Stop losses. This is how it works. You put a position on. Before you ever buy it, you know what the stop is. Don't fall in love with the story. All right? I mean, I got a great story here on skills. I think it's a huge story. Okay? It doesn't mean I'm going to be right. And there's two places where I'd stop this trade out if I bought it, which I have not bought it yet. Full disclosure. Okay? I don't own skills. Okay? But I might. But if I was to buy it in here, the very obvious stop in this case is going to be the low of this big up bar. Okay? If it goes below the low of that big up bar, something's wrong with the story. That's obvious. It'll go below the 200-day, below the 50-day, and below the big up day when they made the announcement of a very important acquisition to help their business. Okay? That's a no-brainer. Let's look at, let's say I buy ZM next week. Okay? It's a nice tight base, and I'll get to a reason why. I'm going to tell you all in a minute why I may be buying Zoom and stocks like Zoom. I'm going to share this with you in a minute because it's very important to the direction of the market in the next couple of weeks. But for the sake of this conversation on stop losses, if I was to buy Zoom, let's say Monday, the low of yesterday is the stop. That's it. That's the stop. Okay? The low of the day you buy it or the low of the previous day, you have to be honest with yourself and say, which was the day I should have bought it, right? So I could have, we traded it on Friday and I sold it. I made some good money on the day trade. I could have held it overnight, but I want to see some strength tomorrow, Monday morning. I'm going to day trade it again. If I catch it again Monday morning and it works, I'll probably hold it in the portfolio. So number one, the stop loss should be the day you buy it or maybe the day before. You have to be honest with yourself. In order for that stop to work, you have to buy correctly. You cannot chase things. I mean, you can, but your probabilities will shrink dramatically. So what we like to say at the ARMR report is we have 3-stage entry points: ARMR value, ARMR hybrid, ARMR momentum. I try to fill my portfolio up with ARMR value entry points. Value has nothing to do with PE ratios and earnings. It has to do with something like this. Zoom is at a value entry point. It's made a tight consolidation right under the 200-day moving average. If it pops above, okay, this consolidation, we know how good that information is as a stop. If it comes back below it, something's really wrong. So that's value entry point to me. A lot of upside, a lot of reward, very little downside because the stop is so tight. Now, if I ran out there and bought, this just is an example. Here's a great stock that keeps running away. If I ran out and bought MGA right now, what's the real stop on MGA? It's not the day I bought it. It's not yesterday. I mean, the real stop would have to be somewhere right here. There's a double bottom right in here. So I would say the real stop on MGA would be below these two lows right here. All right, so that stop is a lot larger. And I don't know what the reward is from here, right? The real ARMR value entry point is probably right in here on MGA, right? Tight to a base, tight to the 200-day moving average. Then the thing starts going up. So this is a momentum entry point if I chase this. So what I'm trying to find, let's look at Palantir. We added this to the portfolio last week. Okay. I'm trying to find downtrends that are broken and stocks that are in a tight pattern right above key moving averages. So now we've got a little pennant forming right here on PLTR. And obviously the low of this big up day, which we day traded successfully, this is the day we would use as the stop. So you get my point. Step one, buy a value entry point, which means close to the stop. Number two, when the stock goes up enough, you raise your stop to break even, to protect yourself. Now you're just playing with the house's money. If it comes back to where you bought it, you're out. You haven't lost anything except for the time value of the capital. The X% can change based on the type of asset. If it's a big cap stock like, I don't know, McDonald's, Coca-Cola, something like that, and it goes up 7.5%, I'll raise my stop to break even. If it's, if we're buying shares of like DNN, okay, which we were right here at $1.20, okay, and we added to it yesterday at $1.26 on the live trading desk, right? All right, so if I'm doing that on a smaller cap stock, you know, I'm probably going to look for, I don't know, 15 to 20% up on that before I raise it to break even, right? So it's based on the volatility of the asset. But my point is, when it pops, you raise to break even. So step one, lower the day you bought it or the day prior is your stop. And you know that going in. Step two, when the stock goes up enough, figure out what that means to you. But to me, it's anywhere between 7.5% and 20%, depending on the volatility of the stock. You raise your stock to break even. 20 is probably too much. I would say probably 15%. Okay? You raise your stop to break even. And on big ETFs, it's 5%. If I'm buying the index and it jumps 5%, I raise my stop to break even. So step one is the low of the day or the previous day that you bought the stock is your original principal protection stop. Step two, you raise to break even when this asset pops X%. And step three, you go to a trailed stop. Now, if you want to say, I want to try to hold this asset as long as possible, I don't want to trade as much, then your trailed stop is going to be the 50-day moving average. Other people who are swing traders that are more aggressive, they're going to use something like the 25-day moving average. So looking at MSOS, right? So right in here, we bought MSOS down here, right? It ripped higher. So what we're looking at, this is the black line is the 50-day, the 25-day, the 14-day, and the 9-day. Depending on the type of trader you are, you're going to use one of these four moving averages as your trailed stop. So guys who wanted to hold it as long as possible use the 50-day and got stopped out here. Guys who are more aggressive, maybe swing traders, are using the 25-day, and they might be stopped out right there. Right? If you're using the 14-day, you're going to be stopped out right here. So there's three stages to wrap this segment up, three stages of stop losses. Lower the day you bought or the previous day is your principal protection stop. Raised stop is break even when the asset goes up enough. And trailed stop is one of the major moving averages, depending on the type of investor you are, to guarantee you don't round trip anything. All right, moving on. What do I think the market's doing next week? Let's take a look at the index itself. So what I said on the ARMR live trading desk, and I was sharing with ARMR insiders in the Slack room on really all week last week. There was a lot of volatility during the week. As you can see, a lot of craziness during the week. And what I shared on the trading desk and in the Slack room is when you're in a bull market, your mechanical bull market particularly, the Friday close and the weekly candle is more important than any one day's hysteria. So you can't have one big down day and get afraid and start selling everything. You have to carry positions to the stop. This is very important. I find that a lot of people manage their P&L instead of managing their positions, and that's deadly. You don't just sell things because you look at your P&L and say, I've lost too much money today. I got to get out of everything. That's not how to run money. On a big down day, turn that part of your computer off and just look at your positions, look at the stops. If you want to pair positions back, if you want to use a more aggressive moving average as a trailed stop, go for it. But just manage each position. And so what we saw was there was nothing to do on those big down days in the market. we paired a couple things here. We added a couple things there. And by the end of the week, what do we have? Is a real strong confirmation on a weekly level that the market's going higher. There's nothing wrong with that pattern. That's a pretty strong, bar right there. Total shakeout, close higher, all right, inside out bar. This should take off next week. We should have strength right probably through the July 4th weekend. And I don't usually make predictions here because, I could be 100% wrong and as can anybody. And so please understand, when I make a prediction, I am more than happy to cut my positions out Monday if the whole thing's imploding. So I have a conversation with you Saturday, and then, things change Monday. It's, as an ARMR insider, I strongly suggest that you subscribe and become an ARMR insider, because we're sharing this information in real time in the Slack room and on the live trading desk. And so things change, okay? But having said that, the type of action we're seeing on the S&P, this looks like a nice cup and handle, shakeout during the week, close higher. And I'm going to just throw up, oops. I'll throw QLD up here. All right, QLD, which is the same thing as the triple Qs, but just twice the performance of the Qs, and the asset that I use in my index-only portfolio. That's a classic, looks like to me, a nice, maybe not classic, is a little bit bigger than I wanted here, but a nice cup and handle right on the 50, perfect shakeout and reversal on Friday, strong into the close. And if we go look at the weekly chart, we see it even more clearly on the weekly chart. That's a nice cup and handle right there on the weekly chart. This looks like to me the market is primed to rally into the end of the month, into the end of the first half of 2021. Okay, don't forget, money managers get paid quarterly performance, semi-annual, annual performance, and if they can, they mark portfolios up into the end of quarters. That's just how it goes, into the end of the year. Oops. So here's rule number one: don't drip coffee onto your keyboard. Remember that one. Heard it here first. Okay, look. In order for this market to take off, and this is the last thought, we'll get to Q&A. Here are some stocks that I'm looking at. We have industrials already moving. Let's just go through some charts, okay? These are stocks that the ARMR portfolios own, okay? So we have Ford in the portfolio. The thing is absolutely skyrocketing. You can see this green entry point here was an ARMR value entry point that we bought. And I'll go with the daily chart here, okay? So that was the ARMR value entry point. We actually paid up for it. I didn't buy it down here. I ended up paying up for it right in here. And that's okay. I don't mind buying the breakout day. And I would use the low of that bar as my stop. And it never went below that low, because the best investments you buy never challenge that stop. Boom, it exploded, right? So we already have, Ford, GM, these type of things are breaking out in the portfolio. We have things like Coca-Cola in the portfolio that are starting to really accelerate out of a pennant formation. These are economy reopening type ideas, right? We have Microsoft in the portfolio. Okay, so these are the type of stocks that are the first stocks to move when a new bull market hits. And we bought these 2 weeks ago, okay? Then what we're starting to see are smaller cap names take off. And take a look at the small cap index. I shared this with you. Can't remember on what video this was, but I shared with you that we were adding small caps because small caps are actually coming out of a really nice base. Okay, so we're looking for this whole consolidation to be cleared on the upside. Small caps are looking great. And what do we see in the small cap arena that's making money for us? Well, I already showed you, like DNN. That means it's small cap name. Smaller cap, trading like a small cap. I'm trying to think of some, we bought some shares of Beam. That looks like an unbelievable chart pattern to me. But now Beam is going to dovetail with the other part of the market that really matters to me. If this market's going to rip, I believe the last piece to the puzzle So we already have industrials. We already have big cap tech. We already have some small cap names taken off. What we need are the innovator stocks that have been decimated to recover. And that could be where we find the alpha in the next couple of weeks. So let me show you a couple names and then we'll get to Q&A. Beam is an example of an innovator stock. I believe in what's happened in these innovator names is the baby was thrown out with the bathwater. Okay. The ARRK innovator type of funds got destroyed. Everything in those funds got dumped at once. But the leader, the names that are actually really good that shouldn't have been dumped, but they were just dumped, guilty by association, they're the first ones to start going up. And Beam's a perfect example of that. So do your own research here. I'm just sharing with you ideas that look good. Okay. BNGO. Okay. Beautiful runs, massive sell-offs. Now they're coming back out. And you're going to notice these chart patterns all look kind of the same, coming back out across major moving averages. How about an old friend of ours, those of you who know us, Nano Dimensions. This company took advantage of this ridiculous meme run-up to raise $1 billion. There's a lot of value here in a smart management team. Right? So what I like about these patterns are they're tight pennants right at key moving averages. Hey, if NNDM takes out the low of, let's say, a couple days ago, really, it could be yesterday's, Friday's low, it could be that low right here. It's basically the 200-day moving average. The trade won't work, right? And of course, we could add skills here. I don't own skills yet, but I do think that's another type of a name. Total hit right here. A lot of negative hedge fund shorting, type of ridiculousness. But there's your bottom right at the 200-day with a clear stop. So I'll just end on this note. Here are the innovators, right? ARRK Innovator. The index-only portfolio would love to own this asset if it can break out of this downtrend and get back above the 50-day. And that would be the last piece to the puzzle of what I think would be a blow-off in the market. And the IBD 50 is another example of that. Okay. So I'm going to wrap up right there. I had other things to talk about, precious metals, cannabis. I'm sure you guys are going to have those questions and we'll talk about them. That's the end of the prepared remarks. So let's get to comments. Thanks for taking your time to listen to me today and helping me order my own thoughts. So I'm ready to rock and roll 8:30 in the morning, the ARMR Insiders on Monday for our morning call. All right, let's get to Q&A. All right. I put, this is my own message. I put this up. Precious metals, they took a lot of heat, on Thursday in front of, and we can take a look at this chart. Let's just go look at GDX, for instance, right? Dropped right down to the 25-day moving average and held, okay? Some of the leadership like FNV in the portfolio actually had a huge day Friday, okay? So for me, I'm using the 25-day moving average. We had a 40% of our capital exposed to precious metals a couple of weeks ago. We booked some of those profits last week because we needed capital for other names that were starting to develop, which is what bull markets do. So we dropped down to something like 30% exposure. We cut a couple positions down on that day, Thursday, because they went below, and this is how I do it. They went below. Notice how Franco-Nevada closed above the 25-day moving average on Thursday and had a great day Friday. But we cut, for instance, Royal Gold, our position in half because Royal Gold broke below the 25-day. And so we booked a profit. We bought it down here. We booked half of our gains and we'll carry the rest to the stop, which will be the 50-day moving average. I'm really going to talk more about stops going forward because I feel you guys might need that information. Okay. It's really important to know what your stops are. All right. But should these things break out again next week, I might be adding maybe Agnico Eagle or KL, things that traded above, held above their 25-day moving average, right? And come back out of a pattern. So what are some of the things we know? And I posted them on Twitter. You can follow me at Brett Rosenthal on Twitter. Let me remind all you guys, please subscribe to the free ARMR Action Alerts. It's a free email service, right? I'm sending you information to let you know what we're thinking. And I think you'll find that information valuable. It's free. So just go to the website and subscribe. All right. Couple of pieces of information. Russia said, you know, their sovereign fund is dumping US dollar-backed assets. You know, China is opening up imports for precious metals. Russia said they're going to be buying 300 to 400 tons of gold. So all of this comes together with what we know is happening in Basel III at the end of this month. It's just the drumbeat's getting louder. And then I saw today, we all saw today, that the G7 has agreed to make a universal tax on multinational companies at 15%. And hey, what a wonderful thing, right? No, that's terrible, and it creates inflation, which is a wonderful thing for precious metals investors. All right, moving on. I asked the question myself, cannabis stocks, are they on the brink of running higher? I thought they were. These are the names that are on my list. I'm just going to get these questions out of the way in case you guys are going to ask it. I'm going to share this information. All right. Canopy Growth had a terrible day Friday. They all had a terrible day Friday. So they were on the cusp of getting added to our portfolios, and they just imploded. All right. So we have to get out of this pattern for us to get long the Canadian names. We can day trade them for sure. Telray looks really strong. XO looks strong. OGI is in our portfolio. I even thought Kronos looked strong. That's a great looking pennant above the 200-day moving average. So there's some signs of life, and I might be adding these names. We're going to have them on our day trading list every morning next week to see if we can pick them off, and if they all explode higher, we'll leave them in the portfolio. For those of you who like U.S. cannabis, right, MSOS, we have a position on MSOS. I'd like to increase it. I won't increase it unless it can close above the high of that bar. The high of that bar is 42.06. A close above 42.06, and we will finish off our U.S. cannabis exposure in the portfolio. And I think if that's going to happen, you're going to see Truly TCNNF complete that double bottom and break back above the 50-day moving average. All right, those are my thoughts for this morning. Those are my questions I answered. Let's get to yours. All right. Mo, how are you doing, man? Hope all is well. Okay, the market volatility has been too high for me. Last few months, every time I see a green light upside, I get stopped out in a few days. All right, well, Mo, that is, sometimes markets are like that. Right. So like I said last year, when we had that risk on entry at the end of March and we made a fortune, I said, that's not normal. We're going to go into a period where you have some rotation, the market churns, you get a risk on, you get taken out. But I would submit to you that if you look at the ARMR portfolios, I know you were an ARMR insider, so if you look at the portfolios, we have a number of names that we've owned for the last few months that never got stopped out that are moving higher. So I submit to you, it depends on how you build your portfolio, and you might have to adjust your risk tolerance. You may be taking positions that are too risky, so you can't stomach the volatility. Okay? But the other thought is, it's okay. Sometimes you have to put capital out, take it off, capital out, take it off. Then you put capital out 2 weeks ago, and you would be making a fair amount of money right now, right? So you'd raise your stops at this stage to break even. So now you're playing with the house's capital. You can't lose money at this stage. And I say you can't lose. I mean, unless, you know, if something horrific happens overnight, we can't help that. That's investing. You know, we always have that risk. But I'm just saying, at this stage, had you invested correctly on the risk on green signal, your whole net worth would be up. And you should be somewhere at or near the highs of the year at this stage. And so you raise your stops. And if it accelerates to the end of the month, you'll end the first 6 months of the year in positive territory, having a very strong year, even though it took some starts and stops to get there. That's just life. That's just investing. Next question. Hey, Eros, what's happening, man? Nice to see you. Precious metals miners have been frustrating. GDX weekly chart. 0 after. Hey, Mo, when you say it's frustrating, I'm surprised you're frustrated, because at the ARMR report, we're making a lot of money in precious metal stocks. we did last year. We're doing it again now. So the very point that you make that GDX since 2006 has a 0% return is the whole reason that we follow the ARMR investing way, so that we don't round trip things. We put a position on, we book a profit. Let's go look at what we've done just to make sure you understand where we're at. Okay. In Newmont, let's take as an example. Right? We added Newmont down here right after the market imploded last year. Had a huge run on it, right? Stopped the position out somewhere in here, right? We might have tried it 1 or 2 times in here for small losses. Then we picked it up again right here, and we're riding this stock all the way up to new highs for the year. So I'm sorry you're frustrated in the metals, but if you trade them correctly, there's a lot of upside in them. And that's why we are. Now, quite frankly, there's a lot of upside in them. And we're there because we believe at some stage, these things are just going to keep ripping. And they're not going to go below their 50-day moving average. And the upside is going to be enormous. So in the meantime, we're trading them, right? And then we capture a wave that we think could be significant. And that's why we stay on that topic. All right. Let's go look at Airbnb, GILD, and Nokia. All right. A, B, and B. All right. So unless it's a company that I've done research on that I really know about, I'm not going to, there's nothing for me to share with you on a fundamental basis. I'm just going to share what an ARMR entry point and stop loss discipline would be, Alex, okay? Because I feel that's really, unless I have information on the company, I've already done research on the company, this is my best, what I can do to really help you. So I'm not going to tell you if I like the company or not. It really doesn't matter if I do or not. If you do, that's great. How would I trade it? To me, this was the first buy bar right here, right? Now, buying it up here, the low of this bar would be a little bit too far for a stop for me. That would hurt too much, right? So I would use the low of this down bar right here. It tested, so it had a big up bar, then it broke out, had a test down day, had a nice day Friday. So if I was long this at the end of the day Friday, I would be using the low of Thursday as my stop. And on something like Airbnb, I would use a 15%, actually 14.5 is what I use. Once it pops 14.5%, I might book a piece of the profit and raise the stop to break even. All right, GILD. If I had the time and I had capital that I was willing to just leave alone and not touch, this would be a great investment, I think. All right, but I tend to get shaken out of it because I have other places I'd rather go with money. And so I end up selling it. So we bought it down here. It ran up a little bit, came back. I sold it. Fundamentally, I think this stock goes a lot higher. I like the company. How would I trade it from here? Obviously, the low of this day would be my stop. When I say obvious, I mean, it's obvious to me. I don't know. But this green line is the 200-day moving average. And so I like to see a bar that tests the 200-day and immediately recover. That means that bar right there is the bottom to me. If it takes out that low, I can't own the stock anymore. As long as it stays above that low, I'm going to let it run. And the stock like this, if it goes up 10%, I'm going to raise my stop to break even. Nokia. Nokia is an idea we got off of this exact conversation a few weeks ago. And I want to really thank the guy who gave us this idea. I immediately did research the next Monday, listened to conference calls, absorbed all the information I could. And I think Nokia is a really good idea fundamentally. It's in ARMR Portfolios right now. Okay, we added it right in here. Okay, so this was the green entry point. So I love this chart pattern. This is a long-term bottoming wedge. Okay, I can't stand this ridiculous huge meme up day. I don't even know what that was. But the bottom line is that gap up here and consolidation was bought by the ARMR report, and now we're riding the stock higher. So it's gone up enough for us to raise our stop to break even at this stage. Okay, so in fact, the stop will be raised right about here, which is what, $4.92. okay? Or you could raise it up to break even depending on where you bought it. Because it really shouldn't come down. Honestly, it shouldn't come below here now. That low would be $4.15. I mean, sorry, $5.14. $5.14. So this is an idea I really like, Alex. All right. Hey, what's happening, my friend? All right. Charts, and welcome to the ARMR report. Glad to have you as a new subscriber, Jersey Devil. All right. IIPR. Oops. One of the biggest names that's in the all of the U.S. cannabis ETFs. I don't own it. I'm not exactly sure. I've traded it before. I used to like the company a lot. Now I'm just not sure about the business model. I don't want to get in your way if you're trading it. What I would do, and there's nothing wrong with it, it popped above the 50-day, all these tight moving averages. I like that setup. If it were me and I had bought it last week, I would be using really the low right there as my stop, which is 178.30. You could even use the low of Thursday, which was 179, but depending on how tight you want to be. These might seem like incredibly tight stops to you, but I'm telling you over and over again, this works for me. I've done all the algorithmic back testing, optimization research. The low of the bar I buy or the day prior is always statistically the best stop. And the reason is your successful investments will never challenge that stop. So what you want to do is take 10 positions. There might be 4 that skyrocket, never challenge the stop. You want to maximize the returns on those 4 names. So you want to minimize the losses on the last 6. Of those 6, there might be 2 or 3 that you can eke out a small gain on. And you got to make sure you cut the other 4 losses as fast as you can so you can maximize the returns of the successful investments. All right. What do we got here? What am I missing? IIPR. Oh, yeah. SII. Sprott Asset Management. I love this story. It's a thin stock. I actually did trade this on my own here. I bought it right here in this blue zone, which is a ARMR hybrid entry point, and I sold it out here. It's just real thin. If I still owned it, the 50-day moving average at this stage would be the stop for me. It seems like the 25 days awful tight on this thing. But you would have to determine the type of investor you want to be. If you're a quick trader, the 25 day is the stop, clearly. How do we execute stops in the ARMR trading desk? We do not get stopped out in the first 2 hours of trading. So if an asset drops below our stop in the first 2 hours, we just grit, and bear it. Grin and bear it? We grin and bear it, okay? We don't act until after 11:30. If after 11:30, it's below the stop and below the low of the first 2 hours, then we exit. But we give the stock as much room as we can on the day it's challenging the stop to recover, because a lot of other people are at the same stop. So there's stop hunting algos that are going to drive it through a stop. But if it closes above the stop at the end of the day, that just proves how strong the uptrend is. Institutions came in and supported it at that price. So anyway, those are my thoughts there on SII. MTBC. Oh, that's a nice looking entry point. Again, for me, it would be the low of this bar right here. The bar that breaches the 200-day moving average, which is the green line. So if I bought that bar, or if I bought the next day, it would be the low of this bar would be my stop. The day that it breaches the 200-day is the stop to me. That's the low of that day is the stop. If the buying power fails to get it above there and it comes back below that action bar day, I'm out. Okay? ATOM. Oh, boy. That's going to have to go on my list to day trade tomorrow morning, Monday morning. All right. ATOM. That's a sick chart pattern. I love that. I don't know anything about the company. And the low of Friday would be the stop. You know, and sometimes sometimes I want to say, well, I could use the low of Thursday. But the fact of the matter is, if this is going to be successful, your best trades won't challenge the low of that action bar. They just won't. They won't close below the low of that action bar if it's going to be a winner off of this entry point. So I just wrote down ATOM. I like that a lot. Hey, Deb, what's happening? Nice to see you. Do you have any comments on Nevada passing legislation to allow lounges? ELNHF. There you go. That's a really good looking pattern. You know, that's actually, you know, you're not the only guy or woman or trader or investor to ask me this question and highlight Planet 13. So I haven't liked the business model in the past and I've stayed away from it, but that pattern looks really compelling and it's outperforming other names. So I'm going to have to add that to my list, my cannabis list. So thanks for that idea, for bringing that to my attention. I'm going to add that to the list. That chart looks really good. And a move above 7 would get me really interested. And then, of course, I would use the low of the 50-day moving average and probably that up bar right there. What is that? 654 is my stop. DQ. Ooh, DQ looks good. You can see if there's a green box on it. Somebody's already asked me about this question recently. And that looks really good, Mo. Let's put that on our list to day trade. DQ. I'm not a big fan of Chinese companies. I usually don't hold them overnight. I mean, I never hold them overnight, but I'm certainly happy to day trade it. If I was long this position, it would be the low of that day right there. 74.13 maybe would be the stop. You know, or certainly the low of Friday could be the stop, 77.18. That pattern looks great, though. Mo, you're all over that. I think I'm going to have to get that on the list for the ARMR Pro Live Trading Desk Monday. EH, yeah, I already have EH on the list from an ARMR insider that brought this up on Friday. So we're going to be following that again for a risk-on entry point to day trade. Wow, charge point. You're hitting on a lot of great looking ARMR value entry points. Really, really nice. I got to do some research on this one. CHPT. Boy, that looks good. Hey, you know what? Let me just do. Okay, Overstock. I just can't ever get behind Overstock because I don't want the Overstock business. I just want the Z exchange business. Or T0, T0, is that what it is? T0. It looks like Coinbase said that, you know, Overstock's looking to spin off that exchange unit. It's certainly a pretty solid chart pattern. You know, if it breaks out of this pattern and goes above 100, I mean, that could be explosive. Fundamentally, I just can never get behind it. If I owned it up here, let's say I bought it correctly, which is right down in here would be the buy point. Somewhere maybe that day would have been the buy day. You know, you got to pick one of these moving averages you're happy with. By now, you would raise your stop to break even for sure, so you don't lose money on the trade, and then, you know, act accordingly. Blink, yeah, blink. I gotta put these back on the list. All these charts look good. You're killing it there. You're picking out some really good chart patterns, Mo. And again, if I owned it, the low of that day would be the stop for me, which would be 34.70. You know, all these names you just brought up, what I'm doing with ARMR insiders who are part of the ARMR Pro Live Trading Desk, every morning what we're doing is we're putting up screens of all of these types of stocks that you're mentioning, and we're just looking for ARMR entry points in the morning. And so as I go, I'm in my own day trading account, I'm just sharing my screen and I'm telling ARMR Insiders, okay, there's a trigger, there's a trigger, there's a trigger. These are the original stops. And then when they hit ATR highs of the day, I'm booking profit, either partial or 100% of the gains, depending on how I'm trading, and I'm moving to the next idea. And those 1, 2, 3, 4, 5 names that you picked off, or 4 names plus the ATOM, those are going to be on our list on Monday morning to look for day trading entry points. Good for you, Festeroso, making some money there. ET, booked a profit there. We've reduced our position in CrowdStrike in front of the earnings announcement, and then we just exited a position after the earnings announcement. It's a blowout number, and they're raising guidance, and the stock is going down. So, I need my money for elsewhere. So, KL, yeah, nothing. I mean, but what I would only submit to you here, Festeroso, and what was the stop you're using? The 14-day moving average? I mean, if you're using the 14-day, it makes total sense. But the stock held above the 25-day moving average, showing strength compared to other, metal stocks. Now, if it closes below the low of that day and below the 25-day moving average, then I would cut it down or cut it out. That's how I would do it. Certainly, you need to follow your own path. I'm just sharing with you how I do it. Hey, I really appreciate that, Techmoggy. Thanks a lot, Deb. That would be great, guys. If you could do that, that would be wonderful. And I'll tell you what, if you guys have not subscribed already, subscribe right down here in the bottom of the screen to the YouTube channel, to the ARMR Report itself. We've created new subscription categories to include all of you, right? ARMR Original, ARMR Extra Crispy, and ARMR Pro. So check it out. I think one of those will fit your approach. All right. Okay, there's that. Great. Thank you. PACB. PACB is part of this resurgence in small cap biotech. And Festeroso, full disclosure, we own PACB and ARMR Portfolios. It's not my favorite chart pattern. Okay. I like, for instance, Beam and BNGO better, and you can see why. They're trading above their 200-day. They're trading above their 50-day. So PACB is a little bit behind, but if it could pop above the 50-day, that thing could get legs. And I own it in here. And the reason I own it down here is that in ARMR Portfolios, we're long Illumina. I mean, this is the way, this is the ARMR investing way. It doesn't get more obvious than this, or I can't think of a better example of what I like to call the ARMR. This is the ARMR way. This is the ARMR way for all of you Mandalorian fans. Okay. What we look to do is we buy weakness in the midst of strength. And so we've done this repeatedly now in Illumina. The sell-off here, the buy point right here, we made a lot of money on that run. Then a double bottom at the 200-day moving average again. And I was on this channel talking to you guys that Saturday telling you we're buying Illumina again. Now Illumina is starting to break out. And I don't really want a portfolio with Illumina that doesn't have Pacific Bioscience. I think those two companies go hand in hand. And so that's why I'm really focused there. ATOS. Skyrocketing, looks beautiful. What can I tell you, Daniel? What would I do from here? This thing's in the stratosphere, and none of these moving averages are going to save you if the thing reverses. So you have to determine where you want to book some profits. What's your target? So sometimes what I'll do when a stock rips is I'll take 20 or 25% of the position out, booking a profit, not being greedy, raising my stop to one of these aggressive moving averages and leaving it alone and seeing how high it can go. But I like to dictate to the market. I don't like for it to dictate to me. So sometimes when it rips higher, I'll sell into that strength like a professional institutional money manager would. Okay? Just a piece. just to check my greed, just to deal with the fear when the thing reverses. I can't tell you how wonderful it feels when it reverses and you can look yourself in the mirror and say, you know what, I wasn't greedy and I booked 20% right at the top. And then you can manage the rest of the position correctly because you're not panicked. You say, hey, I booked some. Now I can leave it alone. I'm using my trailed stops. It's the ARMR investing way. Thoughts on Hexo? Steve, I talked about it. I love it. One of my, from a chart standpoint, I like this chart pattern. So it's very compelling to me. And I don't usually like Hexo, but that chart pattern is compelling. I feel like I've missed the play. Oh, I didn't miss that though. That looks really good. That chart pattern looks really good. I would call this a hybrid entry point. You know, the original entry point's right here. This is the value entry point at the 200-day moving average. And when it pops up here and consolidates at the 50-day, that's your secondary entry point. It looks great. And if I was trading this, if I was investing in this, the low of the gap up day is my stop. 82.40. Newly listed cannabis company. You know what? I have to do some research on it. Is to it. I really don't know. What is that? Ascend Wellness. Aspiria Women's Health. I'm going to have to do some, I'm going to write that down. Because that pattern looks phenomenal. Am I missing something? Is that the chart you're talking about? Is that the company you're talking about? AWH? Newly listed. It doesn't look newly listed. Did it just uplist? I'll do some research, get back to you. Consider taking, I don't know if you're subscribing to the free ARMR Action Alert note, but consider subscribing to that and we can correspond. I can send you a note. Or, you know, ask me here on YouTube next week. Oh, okay. I think I need to do research on AWH. AWWH. Stand Wellness. Okay, I don't know anything about it. I'll have to do research on that. I'm going to do research on AWH, though. That chart looked great. Nets guy, my brother, I'm glad you made money there. I'm glad you made money. Well done, man. I am certainly not going to be right about everything. In fact, I'll be the first guy to tell you I'm going to be wrong a lot of the time. It's not about being right or wrong to me. It's about following a strategy that over time makes me money and protects my capital, right? So there will be certain market environments where assets that are terrible will skyrocket and I just don't trade them. And that's okay. You can trade them. Have at them, man. Good for you. Make the money you can make when the window's open. God, if I had a list of stocks where I've been wrong, holy smokes, man. RMED and XPEV don't even get on the top 10. You haven't even broken the top 10 list of things that Brett's been wrong about. Oh my God, brother. Oh my God. I'll do a video about that. I'll do a whole show about that. All the things I've been wrong about. But you love me. Oh, you give me some love. I appreciate it. Oh, great question. What about Tesla? Oh, I'm glad you brought this up. Oh, I'm really glad you brought this up. Great thing to talk about because Tesla is a part of all of these innovator funds and a large part, like 10%, 9%, 12% of these ETFs. So as goes Tesla goes the whole ETF. And when the whole ETF breaks down, all the good stuff, the proverbial baby, gets thrown out with the bathwater. So if we can just get Tesla to stop going down, if we can get it to go up, are you kidding? The ARRK innovator funds, all of those things will start to run. And then the names that I want to own, Tesla's not one of them, but Zoom and maybe DocuSign and stuff like that might be great opportunities. But there's Tesla. Long-term uptrend, double bottom at the 200-day. Could be a great day trading vehicle on Monday. If it takes out the low of Thursday, we're in big trouble on the stock. So that's a beautiful entry point. It's totally tight. Your stop is really tight. But if you capture it right and the thing skyrockets for whatever reason, look, Tesla's taken a lot of heat because Elon Musk is an idiot. And I mean that in all due respect. He just says things that are ridiculous that end up coming back to haunt him. And so that makes it tough. Sometimes that can make the stock go down for a day or two for no real reason. Then we had some bad China stories. So there's been a lot of bad news on Tesla. If it doesn't break down and reverses and starts going up, we are in a ripping bull market. Okay, so I watch Tesla every day at the top of my list. I don't want to necessarily own it. I do day trade it occasionally, and I think I'm going to put that on my list to day trade Monday morning. Stephen, do I expect a lot more on these names? I don't. What at the end of the day, Stephen, in all due respect to me, who really cares what I think or what I expect is going to happen to a stock? I mean, I know it's fun to talk about. Do you understand what I'm saying? Like, I can wax poetic on precious metal stocks, to the proverbial cows come home, and they can all implode. So I don't want to spend too much time coming up with my expectations. I think they can go a lot higher. I have my stop losses in. I'm walking away now. I don't want to keep talking the story and then not be able to see, see the weakness. So to me, if it goes below the low of Friday on Franco-Nevada or whatever, on the low of Thursday, I'm going to cut these positions in half. And if they go below the 50-day moving average, I'm going to cut them completely out of the portfolio. I don't care what the story is that I think the story is. If they stay above these things, I'm going to ride them and ride them and ride them as long as I can. PLTR we already own. I think I've already gone over that. Okay, JMIA. Oh yeah, JMIA. I got to put that on the list. It's an old favorite. Chad's going to love you for that one. He's going to love you for bringing that back on the list. And I think Skills is a phenomenal story. Like I was saying earlier, I've been doing research on Skills. And so, the low of this big up day has got to be the stop on Skills, right? The JMIA. The JMIA, I would use a stop at the low of probably that day right there, which is 29.33. All right. And then the PLTR, which we already own in the portfolio, my stop is the low of this big up day right here. Maybe the 50-day moving average is the low. That's probably the right stop. Okay. HUSN. Interesting looking chart pattern. Don't know anything about the company, and would use the low of this big up bar as the stop. Yeah, it's true. The best way to contact me, honestly, is to become an ARMR insider in some fashion. But I think, I always check the comment section of these videos, right? So every video on my YouTube channel, there's a comment section. Not just these comments today, but when we're done with this conversation, there's a comment section that drops out in the bottom of these videos. And you can ask me a question, and I always see it. It sends me an email. So I can communicate with you through YouTube. If you just, put a comment and say, hey, we talked about this on Saturday. What do you think? And then I'll respond to you there. Okay? All right, guys. Look, this has been lots and lots of fun. As always, thanks for joining me. I wish you all the best of luck next week. Have a great weekend. ARMR Insiders, I'll see you bright and early, 8:30 for our morning meeting, which we do every morning. We'll just keep riding the mechanical bull and see what we can get out of this run, okay? Do me a favor. Share this YouTube channel with your friends. That's the great. If you want to give back to me, share it with your friends. Get them to subscribe so we can all build our community. I like to say we're an army of analysts followed up by a tank division of algorithms, and that's how we conquer the alpha world. So if you know people out there who you think would offer interesting ideas to us like we do on these Saturday calls, bring them in. All right? Take care, everybody.